It's good to have you join us this morning.
Thanks for having me.
The morning after the release of the GDP numbers. But basically, what's your impression of this GDP, Q2 GDP numbers as they came in yesterday?
Yeah, I think it further addresses our concern because when you look at the trend from 2.3 in Q4 2018 to 2.1 in Q1 2019, and now down to 1.9% in Q2 2019, then it shows that in terms of growth in the economy, so it's growing at a decreasing rate. That sends a very negative signal even to foreign investors. But if you dissect the figure, you see that yes, the oil sector grew by about, I think, 3.22%, and we can only link that to in terms of a base effect. But when you look at the main the non-oil sector that accounts for over 70 or 80% of the GDP, you look at the agri that accounts for about 23%, slowed down. And when you look at in terms of the funds that have been channeled into that sector, you would imagine with the weaker growth, I think about 1.8% compared to about 3% it grew last quarter. So that really shows for concern. It calls for reassessment of how it also calls for impact analysis. So CBN has been releasing funds, Bank of Agri has been releasing funds into that sector. We're all aware of the Earthman crisis. Yeah, we may want to say Q2 is a planting season, but I don't think a lot would have been achieved even within that space because of the crisis that we're having. And that is raising something, food insecurity. We're talking that would increase the price. And we currently know that in terms of consumer spending, it's been, purchasing power is being impacted, shrinking day by day. And overall, you see, looking at the manufacturing too, it's really challenging. They can't create employment if that sector is not growing. Then when we talk about unemployment, will continue to increase. So there needs to be deliberate policy that would unlock potential within that space. Partnership with private sector, I think that's the only way, because if you looking at the government budget, government cannot do anything, based on even debt to revenue. By the time they service the debt, they will need to also borrow to even pay salaries. So capital expenditure would suffer a lot. So there need to be drastic measures in terms of coming up with policy that will give confidence to private investors, and they will be able to attract private investment. We can see how most of the investment are going to neighboring countries rather than coming to Nigeria.
Especially the FPIs and even FDIs.
And there's a major link as unemployment. If unemployment continues to increase, insecurity, there's really nothing government will be able to do, no matter the military that you.
So a whole lot of policy reform is necessary in that regard.
It's very key.
Okay, so give us your illustration of how this Q2 2019 GDP numbers align with the equities markets.
Yes, interestingly, with the listing of MTN and Airtel Africa Stock Exchange, the NSE is trying to at least show a semblance of what the economy looks like compared to when we don't have those stocks listed. Because when you look at the telecoms sector grew about 11% within the service sector. And what we can see, GDP is a lagging indicator. We've seen their half-year results, and we can see if you look at this sector by sector, it's been challenging for even the banking sector. The manufacturing sector been challenging. Most of them have linked it to smuggling, the bottleneck issues of clearing within their PAPA axis. These are some of those major issues. So we feel that prices are already reflecting those results, and we can see the sluggishness. What we're seeing, we can see MTN interest have increased, I think still closed up yesterday to around 141 Naira. If you check their results, can see the growth very positive in terms of top line and even bottom line. And with some of the business initiatives they are also still looking at, that still gives potential for growth. So by and large, in terms of how investors will react, though it's disappointing in terms of when you compare it to analyst expectation, even for Afrinvest, we have reviewed our growth for full year from 2.5% to 2.2% now.
That is even higher than some other folks in the industry.
Yeah, so currently we are looking at 2.2% because for them to be able to achieve that, we are expecting that maybe Q3 would also improve and Q4. But with the way things are, there's really nothing. We're almost at the end of Q3. No major policy has been introduced to expect a growth. So it may, it's not going to be surprising even if it's weaker than what we saw in Q2. So by and large, we'll just expect for long-term investors, we'll just be using this opportunity to acquire those stocks in tranches with the expectation that government would be tired of these negative vibes and would be deliberate in terms of coming up with a policy that will send very strong signals to foreign investors, and also that would boost in terms of the manufacturing sector, especially cost of doing business and also the ease of doing business. Some of those things need to be looked at for the quoted companies. For them, you look at their cost of business and have continued to increase, and for most of those companies can't pass directly that increase in cost to the consumers. Because we look at purchasing power has continued to shrink with high inflation rate. We don't know when the implementation of the new minimum wage.
I mean, that's supposed to be today.
That maybe they would, that may give some form of comfort, a boost to purchasing power. But if all those things are not done, then we feel that the zigzag pattern that we're seeing in this market, gain tomorrow, lose and lose today, and some of those things may still persist for the short to medium term.
Okay, just before we touch on the outlook, how reflective was the picture of these Q2 numbers on the bond markets and treasury bills, basically the fixed income side of the market?
Yes, you can see that CBN's focus has shifted a bit from growth to exchange rate stability. We saw before the crisis within the trade war within US and China, leading to decline in oil prices and the pulling out of funds by foreign investors from emerging markets. So CBN is now trying to make as much as possible to make fixed income instruments very attractive. Because when you look in the next 6 months, we expect about $15 billion to mature in terms of fixed income securities. CBN is not willing to lose all those funds. So they need to make those investments attractive because the country risk premium has increased based on the very evident global risk. So what we're seeing now that we would expect is that CBN will ensure that there's stability in terms of FX as much as possible. And to achieve that, that will come at a price. So CBN, in terms of checking liquidity, the rate at which they will check liquidity in terms of the HOMO bills would be higher. I think the 364-day, the long-term HOMO bill closed at 13.5 last week. And we expect that that may continue depending on how much of comfort the foreign investors are willing to retain their funds. So within the fixed income space, we expect that rates will remain elevated. And as CBN continues to see how they want to retain a lot of those funds at the expense of growth, because CBN has been trying to see how banks can lend, but there's no for the banks, they are there to make money. So if you see that yields are as high, by the time you even the effective after-tax yield, when you check that, it was as high as 16, 17%. So why will you lend at 21% when you have a risk-free investment at 16, 17%?
Really
so you can see the dilemma that the chicken and egg situation that the CBN has focus now shifted mainly to to see how they need to stabilize the exchange rate.
So I should ask now, what's your outlook for Q3, H2 2019, given GDP numbers? Because again, it looks like from this report, this last report, oil sector seemed to be out of recession, grew by some 5.8 to 5.2% or thereabouts. Having seen production up by some 1.98 million barrels per day and all of that. But crude oil prices have tapered right now. Doesn't look like, things are turning bleak, basically.
Yes, for the oil sector, on a base, looking at a weak base effect, we would expect that production will remain around the 1.9 million barrels per day levels, and may sustain that current growth, that level based on base effect. However, we don't expect any major improvement. The agri space, yes, because of maybe the harvest season, we may see some form of respite within that particular space. Okay. And you look at the manufacturing, we don't expect any magic within that space because there's really nothing where this is September, and there's really no major policy that would say that will help jumpstart a growth within that particular space. So in terms of our outlook, we remain a bit conservative, and that's what led to in terms of even reviewing downwards our full year expectation from 2.5% to 2.2%. So by and large, we won't be surprised to see a slowdown again from the 1.9% because things, the ministers that were just appointed just a few weeks ago, and most time when there's that gap, really nothing is happening because of uncertainty. You need to understand the view of the person that would be manning a particular ministry before you take some major business decisions. So we don't expect the Q3 2019 GDP may just over around maybe, if we very up to be optimistic, maybe at 2%, and maybe on a base case scenario, maybe around the 1.9%.
These are really numbers that we'll continue to watch. We'll continue to watch the space. The economy is a major area of the country that everybody actually watches, and we'll see if these estimates turn out to be 2.2 or 2.1% eventually, as projected by a lot of analysts. Thanks a great deal for your time and, of course, your insight here.
Thanks for having me.
The Managing Director of Afrinvest Securities Limited.